Hi, Daddy. What? Wow, Mikael. Yes, I'm a fan of Alicia Keys. Then we have 90 minutes for your friends for a while. Bond valuation. POA. Okay, wait, I show you not my screen. Okay. So recording, yeah, wait. I show you this one. Hey, guys, have you updated the company or not? Your chosen company or not? At least I play lah, Mikael. Then I copy this. You guys update those who have yet update the chosen company for the ratio task 2. Now go check this. The mom, how can you check the chosen company? The main market one. Wait, hold on. Where is this?
Can I choose my own company?
Wait. Hold on then.
Oh, Bursa Malaysia je.
Chosen company here.
Under Bursa Malaysia only, Miss.
Sorry, cannot hear. Sorry again.
Under Bursa Malaysia only, Miss. You cannot like.
Under main market, we have 3 types of market. We have main, ACE, and also LEAP. Only under main market. The rest 2 here cannot. And you must make sure that it's not classified under this category. Wait. How to, wait, I show you the new one.
Miss, excuse me, Miss.
Yes.
Sometimes some companies have the group, the year that goes for more than 12 months. Is that okay?
I don't understand. What do you
like
mean?
The 2018 to 2019. When they take the date, sometimes it might not be like 12 months. Sometimes it might be like 13 months, 16 months.
No, you should take the whole 12 months lah.
Just for 12 months.
Yeah. Why you want to take? Usually we will conduct the analysis for yearly.
Oh no, because some companies they even though they say it's like 2018, 2019, the time period is like a little bit longer in terms of months.
Because it's very rare, but it happened because they want to change their financial year end. Usually if they want to change their financial year end, let's say assume, okay, at the moment their financial year end is every June. Okay, so meaning let's say from 1st June 2019 until 30th June 2020, right? So if let's say they want to change to December, for example, then that's where you will have that, such report lah. So my advice, you may log in to their own website, okay, and then click on the investor relation and find annual report. Do not find quarterly, semi-annually. You click on the annual report and usually it's for the 12 months. Okay.
No, sometimes even the annual reports, they have it like a bit longer.
Yeah, sometimes, but it's not normal. I mean, usually because it's a standard practice for the accounting purpose. It's a standard practice.
Oh, so but it's okay if we just take the figures they have given us and we don't have to like account.
Is it yours like that?
Yeah, the company I took, I think it's 16 months or 17 months, I think. I'm not sure.
What company yours? Who's this talking?
Hatim, Miss. Hatim.
Hatim. Hatim, what company is yours?
Borneo Oil Berhad.
Borneo Oil. Okay, can we discuss yours after this? Because I want to download and have a look at your annual report first.
Okay, Miss. Yeah, no worries. Okay.
Okay.
Thank you.
Others, any questions? Give me 1 minute. Okay. Can you hear me clearly? I'm wearing my headphone now.
Yes, Miss.
Oh, yes, okay. Okay, so for today's one, actually it's not much question. And this topic is very important for your assignment, okay, and also important for your exam lah. As I'm not sure whether I have shared this with you or not last week. Your final exam will be multiple choice question, but it's 60 questions. Okay. Auditor requested us, those who prepare the question, MCQ type of question, we have to prepare 60 questions. Okay. So I already show you my screen. Okay. Before that, let me right. Okay, now for this topic, it is see there's two covers like interest rate and so bond valuation in the textbook, but we only cover for the bond valuation. Okay, now before I proceed with the tutorial question, let me recap. Okay, what we have learned. Okay, let me recap. So now go back to the chapter 1. Yeah, chapter 1, financial manager decisions. Okay, so what are among the decisions that they need to do? The first one is what we call as capital budgeting, or this one also called as fixed asset investment lah. Okay, the capital budgeting concept, okay, basically it's about let's say the company want to expand their business, they want to open a new factory. Okay, so they can have multiple choices. Let's say they want to open a factory in China or Indonesia or Singapore, in Thailand or in Malaysia itself. Okay, so when they have such choices, okay, so they have to conduct this capital budgeting analysis. Okay, so and then after, okay, after they already confirm, let's say once they conduct the capital budgeting analysis, they found out that it'll be much more profitable for them to open the factory in Indonesia, for example. So after that, they need to look into the fund. So once they confirm, okay, about their fixed asset investment, so basically for capital budgeting, it's about investment in the non-current asset. Okay, even for example, if let's say the company wants to buy new machineries, vehicles, okay, all those is still considered as capital budgeting concept. Okay, so once they confirm, they need to look into the fund. Okay, where's the fund is coming from? Whether the company wants to take the fund from the sales of from the selling of their own shares, or okay, or they want to issue bond. Okay, so bond is a long-term debt, okay, that being sold by issuer, okay, the company, okay, to others, okay, to the investor. It can be public and it can be other companies as well, okay, in order to finance their purchase of the non-current asset lah. Okay, like even opening factory in other countries also considered as investment in the fixed asset. Okay, fixed asset also known as non-current asset. Okay, so once you confirm with that, yeah, so it's actually quite costly. Yeah, it's quite costly for companies to issue. Let's say I already listed company and I want to fund this project, okay, factory opening in Indonesia. I want to, if I want to issue more shares, okay, if I want to issue additional new shares, it's quite costly for me. So then I decide to issue debt or bond. Okay, so debt in finance, basically we focus on this financial asset, what we call as bond. Okay, we're not looking at other alternatives like bank loan or whatnot lah. We're not looking at that. Okay, so how it works for bond? Okay, so meaning for fund, okay, fund or the capital coming from the capital, okay, available for the company are those from stocks, okay, stocks also known as shares or equity. And then another part we have this bond lah, okay, debt financing. We call this debt financing. Okay, basically it's the company. Let's say I'm that company ABC corporation. Okay, I want to open a factory in Indonesia, so I need their money. Okay, so I owe my bondholder. Okay, so those who buy the bond and own the bond certificate, those what we call as investors or the bondholder lah. Okay, so it's work quite similarly with stocks or shares, but there's a different concept lah. Okay, there's slightly different concept. So now, let's say now I'm looking. So when I want to expand my business, okay, I want to open a factory in Indonesia. Let's say I need 10 million. Okay, let's say I need 10 million. So I say, okay, now we issue bond to public. So I'm selling, so I sell to you the bond at today's price, let's say 900. Okay, so I sell the bond to each one of you for 900. So each one of you bought my bond. Okay, so now I already have sufficient fund. Okay, so now I built my factory in Indonesia. Okay, so now what's in for you? Okay, because you are considered the investor lah, the bondholder. So how could I compensate you? So when I compensate you, that's what we call as coupon. Okay, usually how I compensate you using coupon payment. Okay, coupon payment. Okay, so usually in that bond certificate, they will highlight, okay, the par value. Okay, basically par value, also known as face value or future value or maturity value. So basically this is the amount that you will receive from me at the end of the maturity period. Okay, so usually it's a standard one for bond. Par value is always be 1,000 unless they stated otherwise. Okay, and then on that certificate also they will mention this coupon rate. Okay, so what is this coupon rate? So this rate, rate means percentage lah usually. Okay, so let's say I give you coupon rate of 10%. Good. So this coupon rate, okay, then I can convert it into coupon payment. So this is the compensation that you will receive, okay, from me. Okay, because I use your money, you give me your money, so basically I owe you. Okay, I owe you that 900, right? So in order to compensate you, because bond is a long term investment. Okay, because I use your money and I will return you 1,000, okay, during the maturity period. So I give you this coupon rate. Okay, so coupon rate, I convert it into payment into the currency value. So I just take coupon rate multiply with the par value, which is always be 1,000. Okay, so like in this case, 1,000 multiply, 10% multiply 1,000. So I will pay you 100 every year. Okay, let's say this is for 10 years. And I hope that you guys can see this clearly. Okay, let's say lah. Okay. 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 So now let's say now I sell to you 900, right? Okay, 900. So this is the this is year 0, sorry. This is except today lah. Okay, then I use your money, so now I have to compensate you 100 every month. Sorry, not every month, every year. So that it's not line because it's quite difficult for me to draw it here. So I pay you 100 every year until the maturity period. Okay, so at the end of year 10, okay, you will also receive your 100, and then I will also pay you 1,000 at the end of the maturity period. So in that certificate, they will mention about the this coupon rate, days, okay, days when it will be due, okay, the date, okay. So let's say it's for 10 years, okay, and then what else? Another one, yeah, that's it, okay. So this is for the bondholder, so these are their profit lah, their gain lah. Okay, 100 every year, and then at the end of the year they will have this 1,000. 100,000. Okay, so that's how it works. So bond actually is very simple. It's very simple lah. I mean, it's a long-term investment lah, and it's considered, if we compare, okay, with all financial asset, bond is considered the low risk financial asset, and usually it's not all listed company can simply issue the bond. Definitely they have to get the approval from the Securities Commission, but each of these bond, when let's say my company will have many type of bond, so let's say this is bond factory one, okay, something like that anyway. So each of this bond, they have their own rating, but actually it's not compulsory for them to categorize their bond into their ratings lah. Like Malaysia, we have RAM rating. This company RAM rating Berhad, if I'm mistaken, they will rate, okay, the bond classification like AAA, AA, B, BB, C, okay? Because here company like me, okay, I am obligated to pay this 100 every year to you. Okay, it is obligated, and usually it's backed by the viable business and projects lah. Okay. Separately, no, I'm not going, Saidul Amla, I'm not going to take your attendance separately. Okay, there's no special treatment here in my class unless you have certain issues. Okay, you have to key in your camps by yourself. Yeah. Okay. Then what else here? Okay. So if I want to draw the timeline, it should look like this. Tak ada bateri dah lah. Wait, hold on lah. Jangan stop, Mami nak work. Okay, so this is the timeline lah. Okay, like the one that I did just now. Okay, so this is today. So now, when you calculate the bond price, okay, we are actually looking at current period lah, the present value. Okay, when we calculate the current bond price, we are looking at this period lah, as a year zero. So when I do the timeline just now, okay, basically when we want to calculate the bond price, we are calculating present value. So therefore, we are using the annuity formula. Okay, we are using annuity formula for this part. Because like the previous example, we have received, okay, this C can be noted as PMT as well, is the coupon payment or the cash flow, whereby like just now, the coupon payment is 100, okay, every year, right? I will pay you 100 every year. Okay, and this is the normal interest rate, okay, the normal interest rate. But in bond, the interest rate here, we don't call this as interest rate. We call this as this two, either one lah, usually. Okay, we call it as year to maturity or discount rate. Okay, the interest payment that usually you will see there's a term of interest payment lah. But that interest payment term is referred to this one. This is the interest payment. Okay, sometimes they call it that way lah. Okay, so whenever you see year to maturity, okay, then you should know, okay, this is the interest rate, which is the normal R, but this is for the bond value calculation. It is for bond value calculation. Okay, so like previous example for the period, this is it will be 10 lah, for 10 years, right? Okay, and this, the yield to maturity will be given as well in the statement. So in that statement, you will see 2%. Okay, you will see 2%. Hold on. Oh, buat apa ni? Jangan kacau mana boleh tak? Okay, you will see 2%. So one, usually the first one will be the coupon payment, okay, the coupon rate. And then for the interest rate, the YTM here, they will clearly mention that this is yield to maturity. They will clearly mention, or they will name it as a discount rate. Okay, so please be reminded of all these terms. Okay, then now this is for the 100, right? Okay, using the annuity. So as I mentioned, when we calculate the present value, when we calculate the bond value, we are actually calculating the current bond price. So this, okay, we're using the present value formula. So don't forget, we have the 1,000 at the end of year 10, like the previous example. So the F here is the par value. That is the principal value which will be repaid at the end of the period, meaning at the end year 10, you will receive this 1,000. So even though like this one is not as F, that you should know that this is always be 1,000 lah. So basically this using the normal present value formula. So 1 plus the interest rate, let's say it's 12% and then power by the period here, like the previous example is 10 years. Okay. Okay, I will just highlight the important part. Okay, the rest like the theory one, please make sure you have a look on these notes. Okay, for example, like this one, okay, what will happen? So usually they have negative relationship. The bond price have negative relationship with the yield to maturity here. So whenever the yield to maturity, the interest rate, the normal interest rate is increasing, the bond price will reduce. Okay, the bond price will reduce. And then please have a look at the rest of the theory here. Okay, for example, a discount bond, okay, premium bond. Okay, like my example just now, when I sell to you the bond at 900 today, and you know that the principal, the face value or the par value also be 1,000, right? So it will be much lower. So I'm selling you at discount. So that's what we call as discount bond. Okay, but if let's say today when I want to sell to you, I sell it at 1,200, which is higher than the par value of 1,000. That's what we call as premium bond. And this premium bond happen whenever your interest rate, the normal yield to the normal interest rate, okay, your yield to maturity is the rate is much more lesser than the coupon rate. Okay, so please have a look at this part as well. Yeah. Okay. So the important thing that you need to know in this chapter, like all of these terms in the slide number 4, okay, you should know all of these terms, and then the par value always be 1,000, yeah, and then the formula lah. Actually, the formula, if you look at this, it's quite long, but but it's not that difficult for this topic lah. That's why as you see in the tutorial question, there's not much question. Okay. What else? That's it. Okay. Now let's discuss the tutorial question. Don't forget this one we have question, the same question in your individual assignment. We discuss this first, then I will briefly explain about the task one. Okay. Okay, now question number 1. I will randomly call any one of you, okay, to give me the answer of this multiple choice question section A. Okay. When you refer to a bond's coupon, you are referring to which one of the following? Bond coupon. Okay, this is how the company compensate to the bond holder. Okay. So I would like to call upon hold on. Narissa lah. Narissa, what's the answer for question number 1, Narissa? Narissa said D, annual interest payment. Yes, correct. Okay. So as I mentioned, for coupon payment, okay, they call it as interest payment lah. And usually it will be once a year, but like in state, okay, in United States, for bond, the payment, okay, the interest payment is semi-annual. For the one bond in United States, every 6 months lah. So when you have quarterly payment, semi-annual payment, so you have to do adjustment like the one that we have done last week. Okay, so the compounding frequency is semi-annually. So you have is 2. Okay, quarterly is 4, meaning it's 4 times in a year. So semi-annually 2 times in a year. Then what else? Monthly, quarterly, weekly 52 times in a year, monthly 12 times in a year, and then daily is 365 lah. Okay, so you have to look lah whether if let's say like interest rate, okay, then you have to divide, and then the period you have to multiply. Like this case also same, but you have additional for the coupon payment. Like this one you also need to divide lah. Okay, let's say like the previous example whereby I will pay you 100 coupon payment, that is only once a year. But if let's say I say, okay, I want to make payment for the interest is semi-annual, so every 6 months. So 100 divided by 2 lah. Okay, so I split. So every 6 months, I will pay you 50, 50, 50, 50 instead of 100 once a year. Okay. Okay, next question number 2. What is the principal amount of bond that is repaid at the end of loan term call? Okay. So, what is the term being called for the principal amount of bond that is repaid at the end of the the loan term call? Yvonne, what's the answer for question number 2, Yvonne? Is Yvonne here? Yvonne here, right? I think I saw her name is not. Yvonne said E, England. Sorry here. Face value. Okay, yes, correct. Thank you. What is the value of this face value? Yvonne, what's the value? Hold on. Jangan sampai handphone mami tak ada bateri ya, nanti tak ada internet. What is the value of this? Yvonne. What's the value of this face value? How much? Where's Yvonne just now? How much this this face value, par value? How much is the par value of bond or face value of bond? How much? Yvonne, hey guys, you don't know? Hey, I just told you guys it's 1,000. That one you have to memorize it. When you proceed for your degree level, you will learn this again, but with more additional info details, like you have to calculate duration. There's another calculation but not at your level at the moment. Okay, diploma, no, we don't ask you to calculate duration. Okay, so 1,000, it's okay. Yeah. So this one you should memorize lah. This I did mention it. This one, where is it? My slide yourself. This one. See, par value. I put it in the bracket, which is 1,000 here. Okay, 1,000. Yeah, 1,000 here. See? Okay. That one you have to know. If let's say in the statement they don't give you that information, you should know that it is always be 1,000. Okay. Okay. Now let's proceed with question number 3. Which one of the following dates is the principal amount of a bond repaid? Okay. Which one is the following date is the principal amount of bond repaid? Okay. Shami, what is the answer for question number 3, Shami?
Shami, kau mami ke?
Oh, mami tu student mami.
Shami.
Oh, Shami. What's the answer for question number 3? Coupon date, issue date, discount date, maturity date, face date. Which one? What's the answer? Oh, Shami. Where are you? Where have you been? Shami. Shami not here. It's not. Lishita said D. Yes, correct. Maturity date. Okay, thank you for that one. Good. Okay. Okay, and then now question number 4. Which one of the following terms applies to a bond that initially sells at a deep discount and pays no interest payment? So it meant here, what is the term, what is the name for bond that they are selling at very cheaper price, see, deep discount. Yeah? So like the example that I gave you just now, if I sell it to you at 900, right? So what about if let's say I sell it to you for 400? See, you have to compare it with the 1000 lah, so it's almost half, right? Okay, but then I don't pay you any coupon payment. But at the end of the period, I pay you the 1000 lah. So Ben Oi said C, 0 coupon. Yes, correct. Good, thank you. Okay, so 0 coupon bond. So we do have this type of bond. Okay, we do have this type of bond. So this type of bond, this type of bond usually be issued by the government lah. Okay, basically you don't have any coupon payment. Okay, that they are selling to you like very cheaper price, and then you get 1000 at the end of the maturity period. Okay, so we have the slide about that. So one of the example is the treasury bill. Okay, see T bill lah. So T bill stands for treasury, meaning that is being sold by the government lah. This one. Okay, so no predict interest payment, no coupon rate is 0. Okay, cannot sell for more than par value, sometimes called 0 or deep discount bond lah. So for example is the treasury bill. Okay. Okay, now let's move to the next one. Session B, question and problem. So you are required to show clear workings before arrive at the final answer. Okay, so now like this question number 1. A bond has 1000 face value, okay, a market price of 1045 and pays interest payment of 80 every year for 10 years. What is the bond rate? And you have to draw the timeline. Okay, so now like this question, okay, I gave you all information, but then I only ask you, it depends lah. At the end of the question, then you have to look back at the question. What's the question 1? Okay, like this one, I give you all information, but they ask you to calculate the coupon rate. Okay, so 1000 face value. Let's say I don't give this statement, so you should know the face value always be 1000, and you should also know the different terms used for it: maturity value, par value, and also future value. Meaning that is the amount that you receive at the end of the maturity period. Okay, and then a market price here, so meaning this is the current price. So as I mentioned, when we calculate the current bond price, that is the present value. So basically as at today, so if I draw the timeline, it should look like this. So this is timeline. This is timeline. So year 0, 1045. Let's say I sell my bond, I should sell it at 1045. And then, okay, my coupon payment is 80 every year here. Every year 80 until the maturity period, because this is for year 10. So don't forget, at the end of the maturity period, I have to pay the face value of 1000. Okay. So now how to calculate the rate? Rate meaning the percentage lah. So if you refer back to the form, to the slide note just now, I show you the calculation of the coupon payment is coupon rate. You just take the coupon rate and multiply with the 1000 lah. This 1000 is the par value. So it's very simple actually, even though you don't need to use the calculator or what to calculate this, but I still need to show you this one. 80 here, so this is coupon rate, rate, and then you multiply with 1000. So after that, for you to calculate the coupon rate is, okay, you just need to divide and convert it into 100 lah. Okay, so you rearrange, you have to divide, okay, then you multiply with 100, so you get 8%. So usually the first step is you need to calculate the coupon payment. That is the first step. Okay, and after that, only then they will ask you to calculate the current bond price. Okay. So actually this topic is quite easy lah, I can say. Okay, now I want you to calculate coupon payment for question number 3. Okay, I want you guys to get ready with your calculator, and I will randomly call you to attempt these questions. Okay, so question number 3. Okay, question number 3. So question number 3 here. Okay, Dell's bond is 15 years bond with a discount rate of 10%. So the discount rate here, 10%, that is the yield to maturity, or also known as the normal R, okay? And then the period is for 15 years, that is the T. compounding annually. Okay, this is usual and you don't need to make any adjustment. The coupon rate is 8%. Okay, that is the coupon rate. So, and then the first question asks you, A, how much is the coupon payment? Okay, how much is the coupon payment? Okay, so you take the coupon payment or PMT, okay, and then you take the coupon rate and multiply with 1,000. Okay. Who wants to calculate for this? Who wants to calculate this for me? Tessa. Tessa Tay. Is the answer for this question number 3A? What is the coupon payment? How much? How much is the coupon payment? Nanti dia bagi answer kat Mami. Tessa, what's the answer for this one? Calculate for me. It's very simple one. 8% multiply with 1,000. You don't need the calculator at all. Okay, good. Thank you. Simple, right? So this is the first step lah. Okay. Okay, thank you, Tessa. Okay, next. Okay, so we're done with that. Okay, like this one, if it's compounding annually, right? Okay, now what about if, now let's reverse back to question number 2. What about if it's payable, not yearly, let's say it's semi-annually or quarterly. Okay, like this case lah, let's say, calculate, let's say I adjust the question. How much is the coupon payment if the interest is payable every 6 months? Okay, so meaning this one is once a year, right? So if they say this one is payable within every 6 months, so this you have to divide lah, divide by 2. So meaning it will be paid $40 every 6 months. $40 every 6 months. Okay, so now I want you to calculate question number 2. Okay, I want you guys to calculate number 2 and I will randomly call you. Okay, now FYI, okay, the first percentage is the coupon rate. Okay, usually the first percentage in that statement, this is the coupon rate lah. I just write as a CR. Okay, so you have the 7% coupon, 7% bond has a yield to maturity of 6.5%. So this is the normal yield to maturity lah. The normal R. Okay, and then the bond matures in 7 years as a face value of 1,000 and pay semi-annual interest payment. You see, pay semi-annual interest payment. Okay, so what is the amount of each coupon payment? So meaning they pay every 6 months. Okay, so you calculate this coupon payment. You calculate as usual lah, coupon payment. This is C, or also known as PMT. Okay, so you take the coupon rate and then you multiply with 1,000. Okay, 1,000. So then this one is how much? 7%. Okay, divide with multiply 1,000. Okay, then you get 70, right? As you calculate, and I calculate for myself. Okay. But is this the final answer? Is this final answer or not? Dania, Afrina Dania. Is it here? Correct lah. Afrina Dania, is this the final answer? Is 70 is the final answer for this question? No. Okay, so what you need to do, Afrina? So what you need to do with this 70? Since you said this is not the final answer, so what we need to do with that 70? Afrina Dania, what do we need to do with this 70 then?
Miss, can I ask why is 7% is not 6.5?
6.5 is the yield to maturity. That is the normal interest rate. Remember I told you guys, I said there will be two interests. You will see two rates. You will see two rates in the statement. So one will be the coupon rate, another one will be the normal interest rate lah. Okay, but for bond, the normal interest rate we call as yield to maturity. And usually the first, as I mentioned just now, okay, whatever you see the first percentage, that is the coupon rate. Okay. Okay. Hey, Afrina, you said no, why? Why is not the final answer? What you need to do with the 70? Oh, Afrina. Divide 3 cost semi. Look at Yan. Conceptually correct, but it's not 3 lah. Still thinking. Okay. Not divide by 3, look at Yan. Divide by 2. Divide by 2. Okay, now. I explain again one last time for this coupon payment. Okay. So, coupon payment is where I compensate you. The company that issue you this bond compensate you because you buy that bond. Okay, as you all know that this bond is for long term, right? Okay, you buy that bond, same like it's quite similar with stocks lah, shares, right? When you buy shares, you expect that you receive dividend, right? But for the preferred stock, it is compulsory. Okay, how the company compensate their preferred stockholder, they have to pay them fixed dividend amount. Okay, so that's how they compensate the stockholder. Okay, but for the common stockholder, it's actually not compulsory. Okay, but so it works similarly with the bond holder, but it's compulsory for them to pay this coupon payment in order to compensate you. Okay, because this is long-term investment, right? Okay, so I pay you like this one 70 every year, once a year. Okay, now for this coupon, this is once a year lah. Okay, but now it mentioned that, okay, and as I told you guys, the coupon payment here, the coupon payment, coupon rate, usually they refer as interest. They call it as annual interest. Okay, this is not the same normal interest that we learn. Okay, so only for this topic for bond. Okay, so for bond, the normal interest that we used to learn, they call it as yield to maturity. They call it as this. So please make sure you have clear understanding in regard with these two. Please, because common mistake, student always confused with these two terms. They switch. That is the common mistake lah. But based on my observation for the past few semesters, student did well lah for this topic. Okay, the one that did not score well is just they switch these two rates. But for the calculation part, most of them did very well. Okay. So now, since this one I mentioned for semi-annual, so like look, I mentioned this, then you have to divide by 2 lah. Semi-annual meaning you break it down to every 6 months. That's what you mean by semi-annual. Okay. So this 70, instead of you pay once a year, then you pay every 6 months. So you split it, so that's why you have to divide. Okay, then divide by 2 because semi-annual lah, 2 times in a year. You make payment 2 times in a year. So that's why you have to divide by 2. Okay, So then it will be 35. Okay. So this is the common practice for bondholder in United States. They don't hold the coupon payment for once a year lah, but they will pay it every 6 months lah. So let's say you have this, okay. Let's say you buy this bond for 7 years. So you will have that coupon payment lah every 6 months. You will receive this 35 from the bond, from the issuer, from the company. You receive this $35 every 6 months for 7 years. Okay. Okay, now let's reverse back to question 3. Okay, question 3 we have discussed 3A, you calculate about the coupon payment, and then 3B. Okay, 3B, that is the first step lah. First you calculate the coupon payment. Okay, and then now you have to calculate current bond price lah. You have to calculate the bond price. So you use the formula. This is the formula. Okay. So you have to settle the one in the big bracket here, and then you multiply with the coupon payment here. Okay, and then you plus with this. This is the 1,000. The F is always be 1,000. Okay. So now based on the previous question, question 3A, your coupon payment is 80. So I sub all the information into this equation lah. So 1 plus, because I'm typing here, so you might, but make sure you prepare it as per this format lah, then it will be easier. Because here I'm typing. Okay, the interest rate R here is the discount rate here. Okay, 10%. And then power by 15 years. Okay. And then this one, the interest is 10%. Then you plus 1,000. And then this is, what is this? 10% lah. Okay. So you solve this one first, the one in the bracket. I usually start with this 1 plus 10% first. Okay, you solve this one. Only then you plus with the green part here. Calculate for me. Once done, please type in the chat button. So please make sure the decimal, the last two, make it to 2 decimal points, and round it up. Try, use your calculator. If you don't press your calculator, then please be reminded that your final exam is 60 questions. 60 questions. So please make sure you get familiar with all this formula, and press your calculator very fast. 60 questions, 2 hours. I think see, I omitted this one. 15, sorry. Because just now I deleted those figures. I give you 2 minutes to calculate. So now 12:54, so 12:56. Lukayan 1970.55. No, wrong. It's not that answer, Lukayan. It will be less than 1,000. The hint is it will be less than 1,000. Calculate again. You start from here. You start from 1.1. Okay, how I did? 10% is 0.1, right? So plus 1. So I just press 1.1. Then I press power 15. And then I press equivalent sign. Okay, I press equivalent sign. And then I take 1 divide answer. Okay, to this part lah. To settle this part. And then I press equivalent sign. And then the 0.2399, 0.23993, that is this part of answer. So I minus answer. Okay, I minus answer, then I press equivalent sign. So I have the whole answer here, which is 0.76. Okay, and then I divide with the 10%, which is answer divide with 0.1. And then I multiply with 80 here. Okay, then I press equivalent sign. Then I have 608. Okay, then I press, so answer plus, okay, I open bracket, This one I put it together lah, lump sum. Okay, so 1000 divide 1.1 power 15, and then I close bracket. So I will get the answer of, yes, Alan Woody, correct. Okay, 847 point, around lah, 88 lah, to decimal point. Dekat yang calculate again you should get this answer lah, 847.88. Okay, thank you. Others, do you calculate it or not? So actually after you have done this, okay, this tutorial together with me, so you can try to do your assignment question task 1. Then that's it. Okay, you can start with, you can do all of the question. Okay, I would like to remind you guys, those who are not in the Google Hangout, please make sure you join the group Hangout, the Google Hangout. I've posted many information there this morning in regards with the assignment. Please view the video that I've recorded in regards with the financial statement analysis in regard with the IAS ESG. Okay, but I copy the YouTube link. Hold on. What is it? No. So I made a lot of announcement here. So please have a look. Copy link address. This is the one. I explained, actually it's not that difficult for the task 2 part C, for the non-executive director. So I explained to you what is the non-executive directors, the executive directors, the independent directors, all those stuffs. Okay, and I also taught you on how to use the Excel, how to draw the graph in Excel. Okay, and then just paste it in the Word, but that one was at the end of the video. Okay, so please make full use of it. Okay, if you really follow my instruction, trust me, okay, you will score well for your assignment. It's just maybe like the part of commenting part on how to do the ratio analysis and also the recommendation. Okay. Okay, now let's proceed with the next question. Okay. That's not ABC. Okay. So now you have to calculate what is the bond price, is the interest rate compounding semi-annually. Okay. So first you have to do the adjustment. But like this one, you can adjust directly in the equation, or you can adjust it separately lah, like this one, like this example. Miss attendance through comes later, right? Yes, later. Okay, now, so for the coupon payment, you have to divide, like the one that we did just now, right? So when it comes to, when you have interest payment more than once, okay, more than once a year, so you have to divide lah. You have to divide. So like this, semi-annual, the compounding frequency is 2, quarterly 4, and so on lah. Okay. So here, I really forgot to the question just now. How much? Here 80, right? So you want to pay every 6 months. So this is once a year, right? This is per annum, per year. Okay. So you want to pay only every 6 months, so it will be 40 lah, right? So 80 divided by 2, that will be 40. Okay, 40. Okay. And then for the interest, also you have to divide. Okay, this is the normal interest. Okay, this one, the also what we call this as yield to maturity. So ours is 10%. Is 10%. So you divide by 2, that will be 5%. Okay, 5%. But for the times, for the period, because, instead of once a year, then you have like every 6 months. So it will be 2 times in a year, right? So that's why for the period, you have to multiply with 2 lah. So that's why you have 15 years, then you multiply with 2, then it become 30 years, okay? Not 30 years, 30 times, 30 times. Payment in 30 years, payment in 15 years, but they will pay 2 times. So in total, you will have 30 times in that 15 years. Okay. So then I just adjust this accordingly. Okay, if let's say I miscalculate or what, please alert me. So this one I change. This one 1,000, 1 plus 5%, and then this is 30. Okay. So calculate for me. What's the answer for this one? Give me up to 2 decimal points. Give you 2 minutes. Ayo. Ellen said 8 for 6.28. Yes, correct, Ellen. Thank you. Right, 8 for 6.28. Usually it will be like slight different lah. But there's a difference lah. So 8 for 6.28. But if let's say yours here at the last 2 decimal point will be slightly different, it's fine. It's fine. Usually it's not major lah. Unless this one 8 for, 8 for 5, then yes, you have to check. Okay. Thank you, Ellen. Okay, now I want you to calculate for the bond price, okay, D, if the interest rate compounding quarterly. Now I would like to call, wait. Hatim Ali lah. Hatim, calculate for me. What's the answer for D? I give you guys 3 minutes. So quarterly meaning every 3 months. So it will be 4 times in a year. Hatim, you calculate for me. This one I assist you. This part, by 4, there will be 20. So everything, this one you divide by 4. And then the period you multiply by 4. Then you have 60 times in that 15 years. This is the workings, yeah. Hati Malik, you calculate then you update me the answer in the chat button. You just unmute yourself and tell me the answer. If the answer, try to calculate this one. Hatim, do you manage to calculate? Okay.
Kamu dapat tahu?
Belum petang. Belum hari. Baru Zohor. Baru Zohor. This one put back.
Ke?
So 2.5% meaning 2.5 by 100, and then you plus 1, it become 1.025 for this part. Just power by 60, then 1 divide answer, 1 minus answer, answer divide 0.025, multiply 20. Then you get the answer, then you plus with open 1000 divide 1.025 power 60. That's it. I got the wrong answer, means what's your answer? It's okay. Zero. It's impossible lah, 0.122. I think it must be somewhere there. Calculate. So others, you should get 845.46. I round up. I round up the last 2 digits. So 845.46. Yeah, Chung Jia Hui, yes, correct. Both. Okay. Try Hatim, until get the same answer. You start with this part first. This one, how I take 1.025, press the power sign 60, and then I press equivalent sign, then I will get 4.39. Okay, and then, okay guys, like last time when I have the face-to-face, okay, usually the marks will be here. Let's say like this question, let's say it's 5 marks, okay. So the 5 marks, okay, 5 marks, this working is 4 marks already. This is only 1 mark. Okay, so that's why I said like usually my student for this one, they just practice, they understand this concept, then that's it lah. The theory part is only like, discount bond, premium bond, and what is the relationship, of the current bond price with the yield to maturity. They have negative relationship, all those type of theory only lah. So they did very well lah. But as long as you show me this working, you will get 4 marks, okay, regardless of the final answer. But now, because you guys, it's online exam and I conduct this in multiple choice question, so you have to ensure that your final answer is correct lah. Okay, so please practice, make sure you're familiar on how to use this calculator, especially like long formula like this one. Okay, try again Hatim Ali, and others also who's not managed to get the same answer with mine lah. Yeah, usually the answer will be slightly different at the last 2 decimal point only. Yeah, even if let's say you round up, but the rest here at the front one usually will be the same lah. Okay. Okay, any questions? So that's it for today. It's not much actually for this topic, and please be reminded like start from topics after the midterm will be coming out for your final exam. Yeah, today one definitely, and so on lah, next week and so on. Okay. So any question you want to ask me? Guys, do you understand or not? So I really hope that at least for this topic, you can score full mark lah. And I would like to add this. Sorry, say one more here. Forgot to mention. So right after this, you can calculate this question for task 1, your assignment. So coupon rate has been given per annum. This one, the first question, task 1A, compute the current bond price for both company if the interest payment is once a year. So you use the same concept. For question 3B, sorry, where is it? You calculate based on 3B, okay? And then you calculate for both. Okay, then for this B part, okay, based on the above result, provide a conclusion. So this conclusion meaning you compare the price that you calculate here with this one. I explained that day, right? Okay, so if let's say lah, when you calculate Petron Berhad, it's the current bond price is 1,000. Okay, so this one in the market is 1,100. Should you buy, let's say this one person selling it to you 1,100 lah, but actually it worth 1,000. Will you buy from this or not? So you just need to mention lah, it is much more expensive. So why do you need, like let's say like Petrol Mahat, you should not, the current price is 1,000, but the current selling price one is 1,100, which is much more expensive. So I'm not going to buy from this. Okay, I'm not going to buy from here. Okay, but so vice versa lah. But if let's say your current bond price, okay, let's say like Shell Corporation current bond price when you calculate at this part is 700. Okay, let's say they are selling it at 1,200. When you calculate the Shell Corporation price, it is 1,000. Okay, it is 1,000, but they are selling it at 800, so it's much more cheaper. So you will buy from this lah. Okay, current selling price, so you will buy from this. Okay, so and you try to relate with other bond concept because it's only 4 marks lah for here. Okay, and then C, compute the current bond price for both company if the interest is payable every quarter. So this is where you have to adjust the coupon payment, the interest rate, the yield to maturity rate, and also the period. So divide, multiply. CRT, divide, multiply. Okay, by 4 lah. Okay, and then the last part, discuss 3 main differences between conventional and Islamic bond. It's not in the slide. So this one you have to find the information. Okay, only 3 points. Yeah. So that's it. Okay, so this part, I already explained in the YouTube video. Please view it. And also at the end of the video, I also explain about others as well. Okay. So anything else you want to ask me? Hatim, you stay for a while because I need to look into your annual report just now. Any question, guys? Hello? Any question or not? If you don't have any question, then I would like to end the class. So if you have anything in regards with the assignment, do not log out yet, attendance lah. I'm not going to mark your attendance. You mark your attendance. Okay. Tellers has invested quite a big number lah, huge amount for this system, the CAMS one. So please make full use of it. Okay. If they don't see, I mean, they will ask the lecturer, why you don't want to use this? We have invested a lot. Okay. So this is the link. Those who never open, the login ID is the same one like your portal. The password also same. I'm not going to tick this because I cannot update this. I cannot update this in the system only after 24 hours. And for the time being, because that day they update the attendance system, so I cannot log into my attendance, your attendance system lah. Still have problem. You're still rectifying the problem. I don't think it's supposed to be indexed there. /campus only, I think. You log in using your usual ID lah, and also password. Usually it's the same one. Key in your attendance first. Those who, so you have 9 minutes to key in your attendance. So if you don't have any question, you can leave. So if you have any question, you stay. If in regards to the assignment, so please make sure if you have anything, drop me an email or book a slot with me. I have a slot on this Friday. So far I have 2 students book the slot with me. So make full use of this consultation in regard with the assignment. Okay. So please make sure you log into the Google group Hangout as well. Faisal. Oh, Faisal. Okay. Bye. Welcome, Natalia, Narissa, Jocelyn, Ellen. Yvonne.
I'm still here for the assignment thing.
Hadim?
Yeah.
Okay.
Hadim, yes.
Okay, hold on. Wait, this one how many? 23. Wait. Okay, bye, Shami. Okay, bye. Yes, Yvonne, you want to ask a question? Okay, bye, Shami. Shami, where have you been just now? I called your name, but you're not responding to me. Man, can I use Excel for the question? Yes. I taught you guys before, right? So I prefer you guys to use Excel. So if let's say you use Excel for your calculation, and then you just copy and paste it lah, but you copy and paste it nicely lah in the Word file. Okay, but as long as it's clear, you know. Okay, Faisal. Wait, Hatim. My concession at 10, but I already have 2 students, but that one is for different subject. So I'm free 11. Even Friday 11 a.m. You want that slot? The concession is via Zoom lah, so you just log into Zoom. Okay, 11 Ivan. Okay, 11. So just log into Zoom and then it's usual. My meeting ID is the same. Yes, you just click at this link. Everything is the same. Okay, password also same. Okay, so even Friday 11 a.m. Who else have yet key in the attendance? I think just now I have 27, right? I just paste this password in the chat button, so please have a look, because now I want to check Hatim's. This is the password. I want to check Hatim's annual report. Brandon done or not? Wait, I haven't checked here. Please do alert the rest of your friend that who have yet key in the password for the camps one, the attendance one. With Mikael, Jason, change your way. Wait. Hatim, what is the company name just now? I forgot lah.
Borneo Oil Berhad.
Oh, Borneo Oil. Okay. Oil Berhad.
The statement of comprehensive income is a bit.
Okay.
Yeah.
Okay, I will look into it. Where's the Borneo? Borneo Oil. Where's the website? Okay. Investor relation annual report. Okay. This one, just download here lah. June. Okay. Assets lah, I think I just type assets. Okay. This one?
That one is okay. It's the statement, the comprehensive income statement one. The one below that, little bit. This one, yeah.
They are supposed to push back that.
Yeah, it says 2018 to 36/2019. So that's more than 12 months.
More? Wait. More than 12 months? It's 12 months, right? July, August, September, October, November, December. December. Correct lah, 12 months.
Oh, it's correct.
Correct lah. Correct lah. Right.
Yeah, I think I got confused.
It's correct lah. It's for 2008 because their year end it's June. It's June. So just now I mentioned June. So you should start from 1st July lah. It's because it's standard practice unless they say, as I mentioned to you, like last semester I have students whereby the annual report is for more than that because of because they changed the financial year end. But actually, because this is standard practice, when they prepare this report, it must be 12 months. That is the basic accounting concept that they should apply. That is standard, right? So across the world, it must be 12 months. Okay. Okay, Hatim. Hatim, are you here?
Yes, miss. Yes, miss. Thank you.
Okay, welcome. That's it, Okay.
Yes.
Yes.
One question only. For the post you post in the Google Hangout, right? And you say that account receivable is trade receivable, usually combined with other receivable. So what does that mean? Is that
this one like this one they don't have. This one usually, you see my screen now?
Wait.
We have done this before. Yo, we have done this one.
Yes. But I mean like you post it, is it just tell us like receivable or sometimes it's always others receivable, like they will name different.
Yes.
Okay.
Usually
That's how I confused.
Usually they will name it as trade trade and other receivable. They will combine it one.
Yeah.
Like the
But sometimes
example.
separately.
So if let's say they combine, you just take the whole figure.
Yeah,
But if let's say they
we just
separate,
take the
they just take that one only lah. Okay.
okay.
Because
Then I
usually
get
they
it.
will combine. Okay.
Because I thought you want us to combine.
No.
Okay.
It's actually by right lah. The right practice, you should separate it, because sometimes the reason why I ask you just take the whole figure, okay, but actually you can check under the notes lah. Sometimes in the notes they provide that detail, sometimes they don't. That's the thing. So I want to make it standardized. So if let's say they combine, you just take the whole figure. If let's say they separate, you just take only that part only.
Okay.
Okay.
Okay, get it. Thank you.
Okay, welcome. So I see you on Friday,
Yeah.
Okay. Who else here with I want to set the attendance. I have 24. I have 27. Okay, welcome. Who else? Brandon. Brandon, go. Brandon, have you update the attendance here? I'm not going to take it for you. Brandon done. Brandon, then log out lah. Luz Mikael. Jason Lee.
No, Miss, I was listening to what you explained just now, so I stayed in class longer. Yeah.
Okay. Then who else here? Jason Lee, Brandon Dan, Luz Mikael. Because I know just now I have 20, how many just now? 27. 1 minute left. Hazim, telah ambil handphone Mami je, Hazim?
Wait, Miss.
Yes.
The Google Hangout, is it the one that you asked us to join when we done our midterm?
Midterm. Yes, that one.
That one, is it?
Yeah.
Okay, then I have it. Okay. I was confused on which one.
Oh, okay. It's the same one.
Okay.
Okay. Less than 1 minute. Jason, Luz Mikael. So I leave first. Wait, I just need to prompt them.
Okay, bye, Miss.
Okay, bye, Brandon. Oh, Jason. Oh, Luz Mikael. I'm not going to take attendance, since you're not around. Then you have to bear with the consequence lah. Okay, I leave first, yeah. Okay, bye.